Halloween. Welcome to another Tuesday night live stream. We talk about all things real estate. This week it's a spooky real estate report. Oh my goodness. All kinds of stuff's happening between Halloween and just craziness. This unprecedented real estate market. I'm so sick and tired of unprecedented times. And I just want it to be boring. And then you throw in all the election nonsense, which we will not be talking about tonight. But and then you just, a dash of crazy weather, and then sprinkle in some Halloween for fun. It's gonna be an interesting conversation tonight. So I hope everybody's doing well. I wanted to kind of dig into an article that I saw that came up last week about inflation and with the real estate market, interest rates are bouncing all over the place. Housing prices are bouncing, inventory is bouncing, and inflation, which, has been going down. The jobs market was very good a couple weeks ago and looking hopeful, but there's a chance that it may bounce back in the opposite direction, regardless of election, whatever happens with elections. The election is not going to be the reason. The housing market is going to be the reason that we have potentially an inflation issues again. So I'm going to dig into that. I've got a question to bring up that came up during after from my comment on video that I posted last week. I'm going to bring that up, and as you're watching this, pop in with your put the banner going here. Pop in with your questions. Let me know where you're watching from and all the things, and we'll have a good conversation. But anyways, enough of me jabbering. I want to bring on my friend from the West Coast. Who? Let me get some sound effects because it is Halloween. He's from SoCal. I wonder who it is. It is Mr. Mr. Joe Porecca.
Oh, I'm dying. You got me dying, Jen. I'm dying.
Oh boy, here we go.
I love it. I love the sound effects. I love the spookiness. I love it all.
Hey, Julie Thompson is watching. Hey, thanks for jumping in, Julie.
Fellow Californian. Hello, Julie.
There you go. Get another California dreaming.
Yeah.
Resident. Geez, I can't even think. This is going to be a fun live stream. I cannot get the words out today. I don't know. It's going to be fun tonight. We were chatting before we went live, and things are just commiserating about the real estate market, right? And coast to coast, and everything in between. It's just I won't say it because this is a family show, but you can fill in it's a blank sandwich.
Yeah.
You fill in the blanks. It's a blank sandwich. It's just not pretty out there. It's we look for signs of affordability, and we're looking for signs. We get a little bit of a glimmer of hope with the interest rates, but for us being boots on the ground, right? Boots on the ground, and I'm talking to other agents, and when someone asks for me to refer them to someone, and I do my homework and I reach out and have conversations, I always ask what's going on in your neck of the woods, and I'm talking to people all over the country, and it's the same story, for the most part. You got little pockets that are busy, but everybody, it's just not people kind of.
Yeah, it's just that's exactly that what you did. That's like that's the perfect summation of the real estate market as we know it right now. And it's just so interesting because, like you said, there are some markets, and that's something that you guys got to remember, when you're watching anything real estate related. Like, real estate's hyper local. So there are markets that are always going to move, but it's just a very interesting time in real estate right now, Jen. It's just very interesting.
You know what? I guess that's one way to put it. You know what I would say it is?
Yeah.
I feel like I'm in the twilight zone between what's going on in the world and everything else. That's the way I feel. Hey, Shay from Ohio, thank you so much for jumping in and chat and joining us on this spooky Halloween live stream tonight. And Shay asked, do you think the rates will drop again? Actually, I was reading an article this morning that is predicting that rates will drop next year. But not by a lot. I would not hold your breath. I don't think there's going to be a lot of movement in those rates. It's really going to depend on what happens with the general economy and the jobs market and inflation, on whether the rate and the bond, how the rate affects the bond market, and what the banking industry does in respond to that. Right. So, I mean, what do you think, Joe?
Yeah, I mean, I think first and foremost, I think Shay asked like the $100 trillion question, right? Like, will rates drop again? And, I used to have so much confidence in answering these questions, but now it's just so difficult because, look at what we saw just a month ago, right?
This is the way I feel like, let's see, today.
Exactly. I feel like I should just take some darts and throw them at a dartboard. And then we'll just see. We don't know, and it's just so difficult because, we saw about a month ago, we got like you said, we got a glimmer of hope. We got kind of this shot of optimism and positivity with interest rates being cut by 50 basis points, which then obviously lowered the mortgage rate. And then just as quickly as we made up ground, we almost lost it again. And now we're flirting back again with between 6.7 and 7.0, depending on, all the criteria and options and things like that. So it's just hard. I do still hear of one more rate drop before the end of this year, but with all the backtracking that we've done with mortgage interest rates in the last 3 weeks, I just don't know. And I could very much see a situation where we do get a federal funds interest rate cut, but the mortgage rates don't respond the same way. Remember, they're not the same. They're connected. They're similar, but they're not the same. And I have a feeling that that's where we could be. If we do get an interest rate drop, I think it could be a federal funds rate drop, but I don't know if that's going to impact actual mortgage rates for buyers and sellers, unfortunately.
100%. And that's important to know because not that we're not going to sidestep the article that I've got for the conversation on this live stream, but just since the question was asked, because the rate does not follow what the Fed and what Jerome Powell announces. A lot of people think, right, that if you hear on TV that the rates, that they drop the federal funds rate by 0.5%, that translates equally over to mortgage interest rates, and it does not.
No,
it absolutely does not. There's no direct correlation. The mortgage interest rate on a very basic consumer level, literally, it's based on what the bankers think will happen. It's like a rumor mill. If they think that there's going to be a dip in in transactions, if they think that there's going to be a good jobs report, if they think that there's going to be, a reason to do so, then they will. But if they feel like there's a strong market, like, they're not going to change. And here you go. I mean, this is where we're at right now. 30-year fixed. And this is Mortgage News Daily. 30-year fixed right now today. This is it's updated live, and it's based on 250,000. Like you can, FICO scores and so forth. You can do your homework, but just on average, 7.03. But this is what you're talking about, Yeah. I mean, this is, if we jump to, the 30-year, pick a line, any line.
Yeah.
I mean, this is where we were. I mean, literally, 2 weeks, not September 13th. Actually dropped down to 6.14%, which is crazy. Right now, it's gone back up again.
Almost a full percent in just, 5 weeks or 6 weeks.
Which is exactly where we were in July.
Yeah, I mean that's almost impressive how quickly we lost ground on the interest rate gain, and obviously consumers are feeling that. But again, there's so much that goes into it, and the general economy makes a big difference. The Fed's outlook. What the stock market does, especially what the bond market does. The bond market is huge right now, and it's crushing mortgage interest rates because, quite frankly, investors are seeing bonds as a better tool for investment on a mass scale. And typically, when the bond market does poorly, they shift to mortgages. And when more people want to buy mortgages, guess what? There's a high demand to buy them, which means they get competitive on the rates. And we're seeing the opposite. We're seeing investors shy away from mortgages and turn more into the bond market because it's making them money and it's like the ultimately safe investment. So the bond market's really kind of the straw that stirs the interest rate and affordability cocktail when it comes to home buying, unfortunately.
Yes. Actually, I want to, hold on one second here. I wonder if, I'll just take a quick look at this again, because this, I wanted to show, oh, wrong slide. Here we go. This is just the snapshot. I'm going to actually, yeah, this will be good. The thing I wanted to show though is like, okay, so there's always a dip during the winter though, right?
Yeah,
So
for
we've
sure.
got, we've got, if we look here, this is in May, and there's a sharp rise, and then we dip, and August. Actually, the rates went up again, but then they went down. Like there's always a dip in home prices. There's typically a dip in interest rates. If we jump to, let's see, 2023 last year, there you go, December. The lowest point was in December 15th. And we've got a little bit of a dip, but then it went back up again. So I guess the reason why I wanted to show that was that I would not be surprised if the interest rates drop down by the time we get into December, into January, because that's typically when we see a pause in the real estate market.
Yep.
And that's totally normal. There's always a dip in, you're going to see everyone watching, you're going to see in the news, you're going to see all the rates have dropped. Home values have dropped. Home sales have dropped.
Yeah.
Every year it happens. Why? Because people aren't looking at houses in the middle of December, January.
It's clockwork. It doesn't even matter. Even here in beautiful Southern California, where it's sunny all the time, still, once you really get past really where we're at right now, like mid to late October, people are like, I'll see you in February or March. Like we've got an election to deal with, local and federal, for presidential, Thanksgiving, Christmas, Hanukkah, all these things coming up, New Year's. It's just people are not in that mode. They're in family time, and it happens like clockwork, which is why if you watch our friend Christina Smallhorn's streams, she talks about how the middle portion of October is the best time to buy a house, because usually you can get a discount because of seasonality in real estate. Yep.
100%. I had this conversation with someone last week, I think, on the live stream, or it was a week before. It was either Jackie or Angie Ufamata. She was on the stream, but we were talking about that exact thing. In terms of the timing of the market and there's a different opportunity for every market.
Yep.
You know what I mean? But let's get on with the article, because that's why people are here, right? So this article I came across, let me make some adjustments here so people can see it a little better. So this came from Fortune. Inflation hasn't been defeated yet because the housing crisis could bring it back. And I said, oh, that's interesting, because we're starting to see some things happen, right? With the inflation kind of settling down, right? Gas prices are going to settle down. Things are starting to, it's like, whew, okay, we're a little bit more affordable, little bit, not a lot, but we'll take what we can get. But the real estate market may be solely responsible for making that change. So the article says inflation has improved dramatically since the Federal Reserve launched its aggressive rate hikes in 2022. But the housing market's affordability crisis hasn't gone away and may even renew inflationary pressure. Housing inventory is still tight. And while mortgage rates are well below year-ago highs, they have climbed in recent weeks, according to Mortgage News Daily. The latest 30-year fix. Well, actually, this was last week. Okay, so this is even incorrect right now. It's not 6.68. It's up over 7%. They go on to say that's as the start of the Fed's rate cutting cycle has failed to trigger the sustained drop in borrowing costs that prospective home buyers had long hoped for. In fact, mortgage rates may stay about where they are for a while as strong economic data and caution among Fed officials dampen the outlook for future easing. Mortgage giant Freddie Mac echoed this view in its latest housing market report on Friday, saying that it sees mortgage rates slipping very gradually over time with potential volatility as economic news may surprise the market. A lot of this, Joe, is going to happen. It's yeah, with any election, things don't happen overnight,
No.
right? And people expect, okay, we're going to wait to see what happens, who gets voted in and what happened, the outcome of the election.
Right.
And then we'll see. And the reality of it is it doesn't matter who gets elected, whatever they intend to do is going to be you're not going to feel that for, at the best several months, even a year,
100%
right?
correct. It's like trying to turn a cruise ship. It takes a second. It doesn't just turn on a dime, and it takes a long time for any changes to go into effect at any government level, even city level, right? But then when you apply it to a federal level, like the presidency or anything like that, I mean, you're waiting 2, 3, 4 years for policies to kick in and start doing something.
Some of them, yes. Some of them, yes. So it is, and I think this kind of goes along the line of, maybe the people they're anticipating how people will react, right? I mean, if all of a sudden everyone stopped buying everything, like you just pulled back on consumerism in its entirety, right? I wanted to bring up this fact. I brought up a very interesting. I'm just going to switch gears real quick here. This is trading economics. This is the annual inflation rate, okay, over the past year. And actually, if I go out 5 years, you can see this is what happened during COVID, right? So COVID, people were like, they weren't going anywhere. They were shut in, and they were buying, but they were trying to buy stuff. But guess what? There was nothing to buy.
Couldn't buy anything. Nobody could sell it.
You couldn't get, well, I mean, you try to order, people were trying to order furniture. Remember that? And it was like, oh yeah, great. You'll get it maybe in 6 to 9 months.
Right.
You couldn't even if you wanted to, but then money started getting pumped into the system, and they had stimulus money and unemployment money, and money started flooding the general economy. So people, started to recover, because the other piece of the puzzle is that those small businesses, they went out of business. A lot of them went out of business, and they didn't have money to spend, right? Yep. So you have people, legitimately struggling. And that's where you see, because if you're struggling, you're not going to go out buying stuff.
No.
But that's what you see here. But then as we got our footing, things started settling down, businesses started opening back up, consumerism started kicking up again.
Yep.
There you go. When there's demand, it's the same thing with the housing market, right? If you want that widget and you're the only one, then you're going to pay a fair amount, or even, below market value. But if you've got 10 people, 15 people, 20 people, lined up, and I used this analogy last week, like, you're too young for this analogy, but the Cabbage Patch Dolls, back in the day, when it was like mad hysteria to get these stupid Beanie Babies.
Yep.
It was like some people are paying ridiculous amounts of money just to get one.
Yep.
Had to get one for their kid for Christmas. And this is no different. And this is no different.
It's so interesting because right when 2021 hits, it's, you can see the dip when COVID started, and, and everything shut down right before July. And then you can see right in 2021, as we got back our footing and people had saved all their stimulus money, that time there were statistics that came out that were like, Americans are sitting on the most cash they've ever been sitting on, because a lot of people were still working. Not everybody was impacted, and they were saving money because they couldn't spend it. And then look, you can see when the revenge spending started. I mean, look, it's just skyrockets.
April, and then it was, June, July, and then boom, November. Yep. And then, people were leaving their houses and actually getting out into the world.
And spending money, doing stuff.
Crazy, 7.5 at the height, it was 9.1%.
Yeah.
9.1. So, I mean, that's crazy. It's absolutely crazy, but it has come down considerably, which is interesting that it came down to 3% in June last year, went back up again, and it's coming down, but 2.4 is getting there. right? It's getting back towards normal, but could that go back up? Well, that's what we're talking about today. That is what we're talking about today. So real quick, I want to get to Julie. Julie says, we're about to list our home and our realtor advised waiting until January. So that's what we're doing. So I would say on that advice, your real estate agent should, based on your market, especially during the holidays, it gets a little tricky because every market is a little different. And it's not even the holidays necessarily, but just kind of what's happening in your local market right now. If you're in a situation where you are in one of those parts of the country that has very little foot traffic, that might very well be, a reason to wait till January. I always advise people, I know, Joe, you probably do the same thing, to you put your house on the market when it makes sense for you, regardless of what the market's doing. However, being aware of the market, I mean, we're only talking a couple months difference. I would say that if that's what they advise, but I mean, it is tricky when you combine the election cycle with the holidays.
Yep.
It's a little challenging. I would say that if you're going to sell and buy another house and what you want to buy is readily available, I would just put your house on the market, because even if you sell below market value now, you're going to buy below market value.
Mm-hmm. And you're not going to have to put up with the competition in the earlier months in the springtime. And that's just one thing to piggyback really quick. I actually just had a client that was in this situation. I had two clients. I'm working on a couple of different listings right now. And one client lives in a condo, and that's her home, and they need to sell it for a divorce sale, but it's very amicable. And they said, Joe, should we get it on the market now, or should we just wait till January? And I said, honestly, if you're living in the house now and you don't have a major financial or intrinsic need to move or to sell, I would just wait. Just wait until mid-January, get it listed, and we'll probably have a little bit more action at that time. And then I had another person on a different property who came to me and said, hey, Joe, I'm thinking about selling my house. Can you help me? Do you think I should wait till January? I said, well, the home's vacant right now, right? And they said, yeah, the home's vacant. I said, you don't have any renters in there? No. You're not Airbnb? No. And you don't live there? No. So that house is costing you money right now, right? Yeah, it is costing money right now. Then why are we not selling it? Why would we just let it sit here and sit vacant? Exactly. Yep. Put it on the market. So I would say that it also comes down to your situation
100%.
In conjunction with your local market. So, Julie, if you and your family are enjoying your home now and you don't have a major need to sell the house right now, then you're probably going to be fine to wait until January, especially if you're continuing to live in the house and make use of it, and you're not just paying a mortgage payment on an empty home or paying utilities on an empty home.
What's the market in Northern California, Joe? Is it moving? Is it not? Less so. Like, do you have a sense of what the market is up there?
So Northern California, similar to Southern California, is kind of a tale of the area of where you're at. So like stuff like San Jose, San Francisco, Palo Alto, all those hot spots, those the techie, trendy hot spots. You would knock your socks off to see what stuff sells for there. And that stuff's still doing okay. But then there's Sacramento also has been doing well, because that has been the kind of the affordable alternate to San Francisco, San Jose. So the areas around Sacramento have been doing very well, because people are finding the $900,000 3-bed, 2-bath home to be very affordable in comparison to the $1.4 million version of that.
Well, so just as a side note, I had someone reach out to me for a referral for a buyer agent in the Southern California area, in the areas that you're talking about. And she said her budget was like $1 to $2 million. And I'm like, wow, that gives you a lot of flexibility. And the agent, the 20% agent that I referred her to, said to me, yeah, we might be able to find something for her. I'm like, what do you mean?
Yeah.
Yep. $1 to $2 million. And they had trouble finding something.
I know. And it's crazy.
Like, this is bonkers.
It is
crazy money that I just can't. That is not in my wheelhouse.
And it's crazy because my area that I'm in is only 1 hour east, maybe 40 miles, 50 miles east of the area that you're speaking about for your Southern California referral. And for 1 to 2 million, you have your pick of the litter. You buy whatever you want. You probably buy 2 houses. Actually, if you didn't need anything special for $2 million, you could easily buy 2 homes and have some money left over for a Porsche or something if you wanted. But in the beach communities, it is
not a Porsche. Although it is
Mercedes, whatever you want, fill in the blank.
Oh my goodness. Let's get back to the article.
Yes.
Shall we? So the article says such incremental improvement won't provide much of a boost to the housing market either, as inventory stays constrained and home buyers sit on the sidelines while waiting for mortgage rates to drop further. There have been some signs that the lock-in effect is waning, and that is normal. I'm going to comment about that in a second. It's waning a bit as as rates drop, putting more supply on the market, but that's not enough to meet high demand, meaning home prices will keep rising, Freddie Mac predicted. To be sure, the outlook of the overall economy looks positive, as the Fed's half-point rate cut will boost consumer spending and credit. However, while inflationary pressures have been declining, there are also potential upside risks to inflation, the report warned. One area where inflation could resurge is housing inflation in an environment where the fundamental mismatch of supply and demand remains a major challenge for the housing market. I just want to pause for a second and just comment on the lock-in effect. So the average, what would you say right now, Joe? I mean, that the average time period for people in their homes has substantially changed. It used to be, for a long time, it was 5 to 7 years, then it was 7 to 10 years, and it's now on the longer side, right? I mean, people are staying in their homes, probably 7 to 10 or longer, I would say, at this point. However, there's going to be a tipping point where, regardless of what their rate is, they're going to move. And the longer, as time goes on, you're going to start to see, and it's already happening, the number of those low 2.5, 2.75, 3% and under interest rates, those lock-in interest rates, the interest rates that are causing the lock-in effect, the number of mortgages with those interest rates are shrinking, and it's shrinking by the day, because people, either they're non-assumable mortgages, or they aren't being assumed, or people just they can't wait any longer, so it's interesting, it's like, there's no direct correlation that these people are not going to move until we see, substantially lower rates. Not necessarily. Let me just check the chat real quick. Let's see. Hold on a second here. We've got, I'm just managing the chat. I'm going to tell everyone, just to put a blanket message out on the chat, that if there are any political references or anything of that nature, you are voted off the island.
And I was like, how do you want to talk about this, Jen?
No, I don't think it's appropriate. I think we're just going to keep it on the topic. Julie says, my cousin in Pleasanton just sold a home for almost $2 million in days, but we're in Central Valley where things have slowed down. There's money out there. There is money out there.
Oh, you should see that. I just saw a tract home that came up today in one of my email newsletters from an agent up north in San Jose. This is a very, very basic tract home, 2.3 million. 2.3 million. Like, it's crazy, especially up there.
Find me a lot of land. I feel like it's worth having a company like put my house on a flatbed and drive it across country, plop it down.
Yep.
Make myself some money. There's probably some money to be made there. Fitness Health says, Jen is right. Well, thank you very much for that. Markets vary in Philly. Agents lie that prices won't crash regardless of elections, when PA is top 10 state that people is leaving, mainly Philly, because crime, even in nice areas. You know what? What's interesting is that actually, Pittsburgh was named one of the top most affordable places to live in the country. And there's actually a lot of people. I think that depending on where you are.
Yeah.
Where there's going to be, I mean, you come to Massachusetts, and if you're in certain areas around the city, you need to make sure your doors are locked and all the things. But you head south of the city, down where I'm at,
Yep.
Are we crime free? No, nowhere's crime free.
I have heard that Philly.
Philadelphia has like the Amish, and they're not crime free, right? So, but yeah, I mean, I think that some areas, are definitely going to be less of a value than others. But you're absolutely right. Agents do lie that prices won't crash. You know why they're lying and why I tell you? Because they don't know.
They don't know. And you know what?
Nobody knows. If somebody says that prices are not going to crash,
yep.
Please let me know how their crystal ball knows that. Because I want one of those crystal balls.
I'm glad you brought that up, Jen, because that's a good point. Are the agents lying, or do they just not know? And I'm not saying agents don't lie. People lie in every industry, all sorts of things. They're going to tell you stuff that they just want to be true. But at the end of the day, if an agent says prices will not go up or prices will go up, they don't know. Like, they don't actually know, unless they're privy to some type of inside information because there's a specific local thing. For instance, I happen to know that this manufacturing facility is going to come to town in 1 year, and I know that this subdivision is going to likely see an increase in valuation because of that. Okay, that's one thing. But for an agent just to make a blanket statement like prices are going to crash or will not crash, it's a very, very telling sign that you probably shouldn't listen to that agent for very much.
I think that I always talk in probabilities and likelihood. You know what I'm saying? I mean, there's always or I should say possibilities and then probabilities. That's what I meant to say. Possibility and probability. I tell people that truly anything is possible. Anything is possible. And that's why when you buy, when you sell, you do it for, the reasons that are financially sustainable. You buy now, not in hopes of like being able to afford it at a future date.
Yep.
You don't sell because or not sell because you're waiting for prices, right? Or you sell because you're afraid of it crashing. Those are the wrong reasons to do it, because it's always the possibility. Now, on the other side, though, depending on your local market, depending on the amount of data, it's all about the data. What is probable? In my area, Massachusetts, it's the most expensive state in the country. There's a high demand. The demand has not waned. We have not seen prices come down because the demand is so high. So I can safely say, depending on the area of the state, what is likely going to happen based on if everything's created, all of a sudden the jobs market report is trash and, interest rates don't shoot up to 15%, all that kind of stuff. Well, take all that out of the equation. You say what's likely to happen. But to say hands down, I think a lot of it's not necessarily that they lie in the South. It's not that they're outward. They just are uneducated. They're what I call in this channel the 80% agent. 80% of the agents, in my opinion, are not worth the commission they're being paid.
No.
80% in the real estate industry. Why? Because they're not trained well. They're unskilled. They're not educated the way they should be. Okay. And then they don't have a lot of them don't have your best interest at heart, and they're not giving good advice. They're not doing things the way they should be done, which is putting the consumer first and then doing your homework and all the things.
Yeah.
I wanted to take a quick time out to, on the bottom of the screen, there is a telephone number. And I just wanted to bring this up real quick that if you were to like to call, have your question featured in your own voice and become part of a future live stream, you can call that number, leave your first name, where you're calling from, and then your question. And then I'm going to feature it live on the next upcoming live stream.
Oh, and that's so fun.
Just to get people, get you folks involved in the live stream. Did it last week. It was last week. And it was a lot of fun. So I just wanted to take 2 seconds and point that out. Just to finish up this article, Joe, It says, it just goes on to say that any, on the heels of the potential, potential reacceleration in the inflation, it says any reacceleration in inflation could further diminish expectations for more relief from the Fed. This is super important. Super important. The most recent consumer price data shows that inflation was stickier than expected last month, making another jumbo size rate cut unlikely. So, Shay from Ohio, in terms of what the anticipation is of rate cuts, when they'll drop again. These are the types of things that we look for. This is our version of the crystal ball, I guess, Joe. Right? Like the closest we're going to get. Is like. Not necessarily what is going to happen, but what could trigger that from happening. And this is the reason why it's probably not going to happen drastically. It says, and given that the housing costs rather, account for a large chunk of the range of expenses that go into an official inflation readings, more upward pressure on that end could result in outsized effects on the overall data. A lot of people don't realize that inflation in itself, or I should say the impact of the housing market on the total economy is enormous.
Ginormous.
It's enormous. When the housing market doesn't do well, the general economy doesn't do well. And it's not just the house. It's all the things attached to that house. It's the contractors that you hire. It's the mortgages that are made. It's the insurance that you buy. It's the repairs that you have to do, make. It's all those things. The Home Depot runs and the Lowe's runs and the plumber that you hire, the electrical, all those people that stand to benefit from a new homeowner, gone. And that is, and that's why they say that if we don't see more activity in the housing market and sales still continue to suffer, it's going to be, things are going to get, or the opposite. If all of a sudden the housing market starts going crazy, we could have some not so great consequences. Continued strength in the economy and labor markets may also leave less wiggle room for prices elsewhere if housing inflation rebounds. Some analysts have even said that the U.S. will not only avoid a recession, but also a soft landing slowdown with the economy instead of powering through a no landing. As the housing market crisis drags on, Americans are feeling trapped. A third of the 36% of homeowners feel stuck in their dream, stuck in their home, unable to move. We've kind of talked about this already. They said despite a higher prevalence of cash buyers, elevated borrowing costs have weighed on activity in luxury markets too, which is interesting, Joe, because the typical housing market, right? Even, we saw this during COVID, particularly, the cash buyers were not affected.
Right.
As the cash buyer, someone comes in with cash, they'll pay, 5%, 10% over asking price.
Okay, no appraisal, no loan. It's a one-time fee. They might not want to pay more than market, but if they go, hey, one time I got to pay an extra $12,000 and then I get what I want, I never have to think about it again. Okay.
Yeah, if they've got the liquidity,
they've
got that monetary assets, and they've got that financial portfolio to offset it because they have investments in different areas and so forth. They feel it a lot less. It says that prime buyers tend to have wealth tied up in other asset classes. It's almost like they knew what I was going to say. Many of which have been hurt by higher rates. It's actually by my subconscious, like reading it from like a day ago and then remembering, but I digress. It says that adds uncertainty, which has been compounded by the November election. And there we go. So, it's very interesting. Fitness House says correct. Pittsburgh is safer, but in Philly, besides crime, they allow even in downtown area group of 50 guys from the ghetto riding motorcycles, creating crazy traffic all the time. Oh, geez, that sounds like just a boatload of fun. I'm not a city person anyway, so I would tend to stay away from this.
Yeah,
I live in the burbs and love the burbs.
Yep, I'm a suburban kid all the way through, and every time, like, there are things. I was just talking to somebody. It's so funny. I was just talking to somebody about having to go to Santa Monica, which, if you're not from Southern California, okay. So I'm in Claremont, which is about 40 miles east of downtown LA. Santa Monica is probably about 15 miles west of downtown LA. It's called the West Side. It's a beach community. And it should, on a map, it should only take about an hour and 20 minutes, hour and 10 minutes to get there. Routinely, it will take 2.5 hours. And I was talking to this person, I was saying, I would rather drive to Phoenix, Arizona than Santa Monica, California, because you have to go through the city and all the riffraff, all the crime, all the traffic. It's a pain. I'm with you on the suburb life.
Yeah, no, I'm very much, I live about an hour outside of Boston. And
okay, so we're similar.
Yeah, and if I have to fly out of the city, out of Logan, I will pay a car service.
Yep, I do the same
not
thing.
have to drive into the airport, navigate, deal with the traffic, having to figure out a parking and all the drop me at the terminal, pick me up when I come home, drop me at my front door.
I'm the same way. I'm the same way.
Stuck in traffic, I'll fall asleep in the back of the car.
Yep.
That's the end of the story. It's worth the, $130 I pay for, it's one way through 130, but regardless, it's worth its weight in gold, I think, because it's just, dealing with all that craziness.
It's pain.
Yeah. It's a pain. I wanted to dig into a question. And hey, you guys, feel free to drop your questions in the chat and, pop in and let us know what you're thinking. So this last week's live stream, I had an article, Joe, about
yes,
and how we're seeing home builders pivoting to condos. Instead of building one home, they're building condominiums on that one lot, which financially makes more sense from a builder's perspective. A lot of the towns, a lot of the, the zoning, Board of Appeals, the zoning departments and so forth are starting to allow this to happen more and more. It's going to create more inventory for the same footprint. So we had a great discussion about that. And this viewer, Gordon Steen, 8415, asked, what about these new townhouse condos with no HOA? There have to be maintenance costs and other costs. I saw one new condo with only 4 units and no HOA. Someone has to be responsible for paying those fees. So Joe, I had a couple scenarios for this. Okay. My first scenario is, that where he potentially saw this was that, and I don't know the specifics on, when he says he saw it, I didn't know if he saw it online or saw it in an ad or something like that. But if you saw it online, when you go to a site like Zillow, oftentimes, and when I was doing some research, I was like, that's interesting. I want to try to figure this out. Oftentimes they won't put the HOA on the listing online. It'll just be 0 or a blank. That doesn't mean there's no HOA. They're just not telling you what the HOA fee is.
Good point.
That was scenario number 1. Because having no HOA is, when you have any type of townhome situation or condominium situation, it's not like that is abnormal. And the majority of new construction neighborhoods, and I forget what the percentages, actually I was researching this a couple months ago, but the majority of new construction developments, single family developments in the country are all doing HOA. Now, some of the HOAs are peanuts. You know what I'm saying? Like Angie, I think, was telling me she only pays like $40 a month. And it's just for like road maintenance, sidewalk maintenance, that kind of stuff. And we see that here. But when you have a townhome, where it's attached to another building, even if it's like we have some that are single family townhomes or attached single families, I should say. So you look at it and there's 4 units and you would think it's a 4 townhome, building, and it's not. It's actually 4 single family homes where each individual owner is responsible for full insurance on the property and full, upkeep on the exterior. However, there's still common area. So you still pay an HOA. It may be a little reduced, but you're still paying an HOA. So, I mean, the HOA fees, it's going to, HOAs do vary drastically depending on what they cover, but I haven't heard no HOA. What are your thoughts, Joe?
Yeah. So here in my neck of the woods, if you have a townhouse, there has to be an HOA. Like that's one of the criteria for it to be considered a townhome is that there's an HOA, because when you have a townhome, you don't own the land that you're on. That's one of the principal definitions between a townhome and your traditional, single family detached home. So I would be I'm guessing that, like you said, Jen, in your first scenario, that there's probably just a little bit of information that wasn't included. I would be really, really surprised if there was a townhome community that said, "Oh yeah, we're 32 attached townhomes with no HOA." That would be very, very surprising to me, because I don't see how that is doable personally, unless maybe they're considered single family attached, and then I guess maybe, but that'd still be weird. And I agree with you, Jen. I'm seeing more and more new builds that you don't have a choice. Number one, you're getting a condo. And if you do find a new build community in my area that is single family residence, it's still going to have an HOA. And you think to yourself, well, why not? I mean, those builders, Lennar, DR Horton, KB, fill in the blank with whatever builder you like. It's very easy for them to set up a different company, whether it's related to them or not, and say, oh, now we're also in the business of community management. And for a small fee of $112 per month, we're going to manage the fee. Well, that's $112 per month times 74 homes or whatever's in the community. And that's not accounting for any increase in HOA over time. So I think builders are seeing the HOA now as actually a very legitimate, high earning, low cost revenue stream, as opposed to what the HOA originally wanted. Originally, HOAs were literally, hey, there's 17 homes in this community. We're all going to work together. We're all going to set our own rules, and we're all going to manage our own community. And now that has changed. Very rarely do you get community managed communities managed by people that live there. Now it's usually companies that are managing.
Management company. Yeah. And just to be clear, I mean, revenue stream is not $112 a month per unit in their pocket, right? Because all that money has to be accounted for. They have to have reserves.
Yep.
There has to be reserves in that account. If you're getting a mortgage on one of these properties, the mortgage company is going to want to see, they usually have a questionnaire for condos, and they're going to want to see so much in reserves. They're going to want to see that HOA is not a risk or a detriment to potentially selling that property, where they can't get their money back, that their asset is now, not as strong. Ian Moon, thanks so much. I love Ian's avatar. The thing, I love it. This is not just more houses, but more tax revenue for the town, city it's located in. That is a fantastic point.
Yep.
That is absolutely a fantastic point. A town is going to benefit tremendously from having 4 townhomes, right? Versus 1 single family in terms of the tax revenue. There's no question about it. I mean, I had a client that purchased a townhome a few months ago in a new community here in Plymouth, and I mean, this townhome was, it was nice. It wasn't even a town. It was townhome setup, but it was an attached single family, 4 units, right? 4 units. Each unit was probably 2,500 square feet. 3 levels, garage, all the things. They're going for like $750 each.
Mm-hmm.
Each. You do the math. It's like, can you get $3 million, close to $3 million for a one house? Never mind like a a 8,000 square foot house, like who's going to buy it? But in that kind of a setting, but it's like the revenue in the income stream is going to be substantially more by divvying it up into 4 separate properties. There's no question. Joe, do you concur?
I do concur. Yep. And that's a great point. It makes more sense from the tax standpoint, from the city, and from the builder standpoint to say, why would I build one house that I could sell for 1.4 when I could build 3 houses that I can sell for 750? It makes more sense.
Julie says, we're building a new community in Sparks, Nevada. Almost all developments out there have HOAs. Ours is minimal because it's just for development landscape, no specific amenities, $60 a month. See, that's the thing is that, there's a lot of discussion, and the news, the media is, all over YouTube, and everyone's doing, content about it and dramatizing it for good reason in certain states. Mm-hmm. You look at what's happening in Florida, those poor people in Florida, and what's happening with the HOAs because of their having to backpedal with all the things that they've had to do with the foundations and the collapse in Miami, and the money's got to come from somewhere, right? But not all HOAs are bad. Not all HOAs are bad. Some of them are very minimal, and then something like that is going to just protect your investment, because now you've got a community that's not gone to what, because neighbor, the lawns don't look presentable, or the sidewalks are all cracked and not maintained because the city's not going to take care of it in a timely fashion. It's like you get a little bit more control over the situation. AP, hey, thanks for being here. They say it in the mountain ski resort communities in Colorado, HOAs monthly dues exceed $500. Some collect over $1,000 per month. So down in where I'm at, down in south of Boston, okay, I'm in Plymouth, and we have a community that's a gated community that has a golf course, an 18-hole golf course in the community. Everyone that lives there is required. They have a clubhouse. They've got 2 pools. They've got all the different things, right? Indoor pool, outdoor pool. They got all kinds of. They've got their own restaurant. When you buy in there, you are required to be a member of the golf club, whether you golf or not. Doesn't matter. So now you have because they're condominiums, they're townhomes, they're single families. You have your condominium fee plus the membership to the club. Wow. So some of those, even on their entry-level townhomes, they're like $1,000 a month. Some of them are upward towards like $1,500 a month. Wow. For their HOAs. But that's because of what you're getting for. If you're getting into a ski resort, it's a different story. I actually, North Conway up in New Hampshire, Joe, I had a place up there, one of those decisions that you're like, if I had a crystal ball and a time machine, I'd
go back and undo that one.
Yeah. So me with my husband at the time, I'm like, it was like 2005. And I'm like, let's buy a second home in New Hampshire. Real estate's a good investment. Oy vey. And then the market crashed. Yeah. That was me being led by my heart and not my mind. And, but we bought a place up there with the intention to rent it when we weren't there, but because it was a ski resort, and it wasn't on the mountain, but it had like really nice amenities, and a lot of people rented in there on a regular basis. But those fees were upwards like $1,200 a month. And when the market crashed, I said, "Oh, short sale." We lost our shirt. So yeah, 100%. AP goes on to say HOA dues have recently increased due to wildfires and lack of affordable property insurance. Many HOAs had to enforce special assessments. Joe, are you guys in California in general, right? Like in general, being that California is like the mothership when it comes to wildfires. You must be seeing that you must be seeing this. with the HOA fees going through the roof to kind of offset, I mean, we hear about insurance all the time, and that, California is in the same boat as Florida with insurance companies dropping, just leaving the state entirely, being like, no, we're non-renewing. See ya, have fun.
Yeah.
But you've seen HOA dues do the same thing?
Yeah, absolutely. And I'm in a foothill community. So like if you could draw a line and go straight through my camera and out the back wall of my bedroom, or the room that I'm streaming in right now, I mean, I can be in the mountains in about 5 minutes. So
Wow.
yeah, we're a foothill community. So we're right at the bottom of some very large hills. On the other side of those hills is the California desert that takes you all the way into Arizona and Nevada and stuff like that. So my area is one of the areas that, every year during wildfire season, it's very real for us. Just like if you were in Florida and it was hurricane season, like you have to prepare for that. We're in the same boat now. Luckily, I don't live in a mountainous region. I live, in a suburb that looks like any other city, across the United States, but the fires do get close to our city. And there are some HOAs at the most northern tip of my city of Claremont. One of them is called Claraboya, and it's a hillside community. And this is the type of thing where like, they're the first line. If there's a wildfire, they're the ones that are on the front line. And they recently had to do a special assessment for HOA because their fire insurance, their master fire policy, tripled, and they're now going to have to dole out special assessments to help pay for some of that. And that's just one HOA in my small town of about 35,000 people, and all across the foothill communities, we're hearing the same thing. So certainly, wildfires absolutely affects your property insurance. But it definitely is affecting HOAs in my area.
I don't know how, we talk a lot about, in the world of real estate, we talk about, what needs to happen to bring prices down on home values, and, what needs to happen with, inventory, and how we can fix that, and how we can, build more inventory that'll help, create more supply to help satisfy the demand, and that will kind of put some downward pressure on the home prices. But what is the answer for insurance? I mean, I know that the state stepping in and offering options for homeowners, right, is one option. But I mean, there's got to be a breaking point with the HOA fees and the and insurance. I mean, we've already seen some situations where people are losing their homes because they've got these astronomical unpaid fees because they get into a property. Again, we were talking about this at the beginning of the live stream about the fact of the timing of the market and not buying a property based on what it could be. You don't buy the property and say, okay, well, it's a stretch now, but when rates fall, I'll refinance. And that, I would never recommend that. You want to be solid and, kind of anticipate potentially worst case scenario, just to be on the safe side. But what's happening now with a lot of people is not something that could have been anticipated. When you have these, astronomical special assessments, what do you think? What do you think the breaking point is? What do you think that the solution, or what can dampen, offer some support to help make these properties, or help make it, help make this more affordable to people, to kind of ease that burden?
Yeah, that's I think that's the question that everybody wants to answer right now, or have the answer to, when it comes to real estate and the well-being of the United States financially and economically for, the next 10 years. And, to be honest with you, I don't know if there's a whole lot that can be done. I think we are, I think we're in a very precarious, interesting time. I don't want to say unprecedented, because I never want to hear that word again after 2020 and 2021.
Let's not.
But I think that we're still, I quite honestly think that we're going to be dealing with the effects and the decisions and the outcomes of the quote unquote COVID era for probably the next 7 to 10 years, in my honest opinion.
Mhm.
I think that we have a very fundamental supply and demand issue. And I think that's going to take a very long time to correct. When it comes to short-term solutions, in terms of like, how do we alleviate some of the pressure that homeowners are feeling when it comes to insurance? I think that there are probably some ways that can help. I think most notably, we're going to have to utilize some technological advancements to help lower the potential for disaster in some areas. For example, I think that we're going to start to see a lot of homes that are in hillside regions, like in my area. I think that you're going to start to see a lot of people outfit with sprinkler systems, not for the interior of the home, but for the exterior of the home. And I don't mean irrigation. I don't mean lawn irrigation. I mean like defensive sprinkler systems. And we have a couple homes in our area that are that way, where, you know, they have a system that's plumbed into their main water line where they're getting 100 pounds per square inch, a lot of water pressure, and they're running up to their hillsides of their property, and they have huge, I mean, they turn a ball valve, and it's like everything can be wet down in like a matter of a minute. So I think you're going to see things like that to help kind of prevent against some of the wildfire stuff, just as we did with earthquakes. You know, earthquakes were a big problem, huge insurance issue. In fact, we have special earthquake insurance here in California, surprisingly not that expensive, because now we have all sorts of technology, bolting foundations. You know, we have building materials and codes that will withstand an 8.0 earthquake without much damage. And I think that's what we're going to see too with fires and also hurricanes. And I think technology is going to be the big driver in the next 1 to 7 years that's going to help alleviate some of those insurance costs.
Did you see the panels that they put around? I think it was the Tampa Bay Hospital.
Those flood panels.
Flood panels.
Yeah.
They were amazing.
Yep.
They were amazing. They were put up pretty quickly.
Yep.
And, you know, if you were to get that, you know, in those flood risk areas, you know, and get it to a consumer affordable for the consumer, right? Whether it be, again, discounts from this. I mean, they have, look, come on, they have tax breaks for flipping electric cars.
Right.
You can't put a tax break on something that's going to save your home,
right?
Your domicile, your likelihood, your livelihood, right? And by doing so, you know, solar panels. You can buy solar panels, get 30% back. Great. Well, to heck with the solar panels. How about those flood mediation, you know, solutions? Make it more affordable.
Yep.
And then you could. I mean, I think that's absolutely a great point. I think that's absolutely a great point. That you know, that's one piece. My feeling is that, and as much as this makes me go ick to say the words, the government needs to step in, ick. But how about the government steps in to make some federal mandates on the insurance business? Because it makes me want to vomit when they're charging the average Joe, no pun intended, you know, ridiculous amounts of money, right? For like my house insurance is coming up for renewal. And I do a little bit of shopping around, and I'm like, I am not in a flood zone. I'm like, house has been updated. I've had no claims, knock on wood, no claims, nothing wrong, whatever. And one company gave me an estimate for $3,800. My house is 1,700 square feet. I don't live in a mansion.
I know.
On an acre lot. It's just a normal, you know, 4-bedroom house. $3,800. I was paying at $1,800 2 years ago.
Yeah.
Are you kidding me?
Yeah.
No, you know what's happening is those insurance companies, how many millions of dollars are they getting in bonuses?
Yeah.
That's wrong. I'm sorry. I think I fully believe everybody, you know, you work hard and you get your just dessert and the whole 9 yards. I can guarantee you there's none of those millionaires are watching this live stream.
No.
And you know what I'm saying? Like, you know, it's the everyday people. It's like, well, how about we have the federal and of course I'm like, you know, pie in the sky dreamland that this will happen, but it certainly would change things.
Yeah, and you know,
would make it more affordable. They say, oh, we have to increase the cost because the cost of building went up. Well, how about you take a couple $1 million, you know, millions and millions of dollars as you pay your top executives
Yeah.
and make and offset some of those costs.
Yeah. Yeah. And it's interesting. Insurance is one of the very, very, very few things in life that you buy, and usually you have to have it. Like in California, you have to have auto insurance. Otherwise that's a violation. If you have a mortgage, you have to have homeowners insurance.
Yep.
And it's one of those few things that you have to buy in a lot of situations. And then you pay your bills, you pay on time. Like you were saying, Jen, you do everything you're supposed to do. You maintain your house, you update it, you don't file claims. You're like the teacher's pet when it comes to homeowner insurance. And then two things happen. Number one, as you found out, your annual policy goes up for no reason that you did. And number two, the best one, and when I say the best one, I really mean the worst one, the moment that you do need to use your insurance, whether it's auto, home, whatever it may be, they go, oh, you've been paying us very steadily for 27 years. We appreciate your 27 years of loyalty. You need to use our product. The price just went up.
Yep.
So it's the only time where you pay for something, you use what you're paying for, and then because you used what you're paying for, you have to pay more for it. Which, if that's not a classic example of a scam, I don't know what it is.
Hey, David Matney is in the house. Hello,
David?
my friend. Good to see you. So yeah, I mean, I did a video about insurance couple months ago or whatnot, and then when I was doing my research for it, I was shocked to learn, I was very shocked to learn the business model of an insurance company and how that works. And the fact of the matter is, like, you look at a major company. David says, sorry, I'm late. David, you have a note. We need to see a tardy note, or you'll be marked tardy for this live stream. But it's interesting to see how they come up with those policy numbers. You have a major company, right, that has insurance, that insures homes in multiple states. And in one of those states, if there are a high level of claims because of weather, natural disasters, whatnot, what happens is when they have an influx of claims to be paid out, the claims and I always thought that it was a direct correlation. You have an area or a group or maybe, individual, like if you pay more than, a smaller number of people that that are affected similarly, everyone's rates go up. Oh no.
Nope.
My policies are going up because of somebody living in another state.
Because of me and my wildfires. Your policy goes up because of my wildfire.
100%.
Yeah.
And I said, you gotta be kidding me. And that's why it's like, I get the call all the time from homeowners that buy properties, and they're like, Jen, what is going on? I'm not in a flood zone. And I said, I know you're not in a flood zone. Neither am I.
Yep.
But we have to pay for everybody that is.
Yep.
And that is stinking wrong. Yep. Julie says that insurance is beyond frustrating. It's one of those things that it's like, insurance is like eating properly. You need to do it, but you know what? I really don't wanna. I don't want to have like the stuff that's not great for you. I don't want to eat veggies all the time.
Yeah.
But it's like if you don't want to feel like garbage, this is what you need to do. If you don't want to get stuck, God forbid, house burns down or something happens, right? Then you have insurance. You have a mortgage, you have that 25, I think it's 20% of residents, it's either 20 or 22% of residents in Florida don't have insurance because a lot of those people are self-insuring. They don't have a mortgage, so they're not required to have insurance.
They're saving their own money.
So they say, you know what? I'm going to take my chances. And now they lose their house in a tornado.
Yeah.
And they're done.
Yeah, there was one story that I covered on my live stream that talks about a guy in Florida and his wind damage. So here in California, we have homeowner insurance and then we have like earthquake insurance. So two separate things. Okay. We usually purchase through the same entity, but the earthquake insurance is a separate item that you can choose to purchase or not. And I guess in Florida, they have like wind storm or wind event insurance or coverage. If anybody in Florida is in the chat, you can correct me because I'm probably wrong.
We actually have the same thing up here in the Northeast because we have blizzards
Right.
in Northeast. So we have optional wind damage. We have optional tree insurance.
Yep.
If a tree falls on your house, you know, we have optional flood insurance in the sense that if, like if you have, you know, flooding from downspouts in your basement, any kind of flooding in your basement, you know, you can buy this, you know, optional flood insurance, you know, but it's with similar type things.
Yeah.
And it's all part of the policy. The flood insurance, depending on, you know, the individual flood insurance is a separate policy, but anyways, I digress. Continue.
Yeah. And basically he was talking with his insurance broker and he said, hey, my wind insurance is going to go from like $6,000 a year to like $25,000 a year. And and he goes, you know what I'm going to do? I don't want to pay this. And the insurance broker said, it's risky, but what you might want to do is you might want to pay off your house because you only have $40,000 or $50,000 left on the note, pay it off. Don't renew your wind hazard insurance. Just stick with your basic homeowner's insurance. And then, you know, put in storm resistant windows, put on a new roof that's storm resistant, and then save that money that you would put into your old wind insurance policy, just put into a savings account. And then let that be, you know, you've done some improvements to kind of fortify the home in the event of a wind disaster. And then on top of that, you're still saving the money that you can use should, you know, something happen. And that's what he ended up doing. And I think that's what a lot of people are going to end up doing, where you kind of, like you're saying, you know, they're kind of like self-insuring under their own ways. They're allocating their own funds and trying to just still be covered, but save a few bucks.
Yep. 110%, 110%. Janet says, and actually, Joe, I know I want to be respectful of your time because I know you've got a hard stop here at 7:15 for an appointment. Boo.
It is boo.
So, actually, before I dive into this question for Janet, I actually just want to say real quick before you have to jump off, if you guys need to hold on a second. There we go.
Almost there.
Oh my goodness, what is happening here? Come on.
You can do it, Jen. You can do it, Jen.
Give me a second.
I believe in you.
Oh my goodness. Goodness gracious. My apologies. This is how you get in touch with Joe. His link is going to be in the description if you're in the Claremont area. What is it? What's the name of the county?
I'm in LA County. So I'm just outside, outside of LA.
Yep. So when you have to jump, you jump. But I wanted to just get that in so everybody knows how to get in touch with you.
Thank you.
And
whatnot. You know what? And it's always such a freaking pleasure being on your stream. I love it. You have great comments. The community is excellent. I'm so sad that I'm not going to be able to stay for the whole thing. But thank you so much.
And Clark is in the house even. So you're going to miss out on Clark, but ho hum. That's next time. But no, I really, really appreciate you being here and chiming in on the time that you do have.
Yeah, of course.
We're gonna jump into Janet. Janet's comments is in California, we have regulations to control insurance company rates. The problem is that the insurance companies leave if they can't get the rates they need. And that's the thing I was talking about earlier is that, you know, the insurance company executives is, you know, it's it's a cash grab. It's an absolute cash grab. And that's what's frustrating about the entire insurance industry and why that needs to change. I really appreciate Joe being here. Thank you guys for all the questions. So I want to just pop in on a couple more slides here and say that if you guys need to get in touch with me in terms of getting a referral to an agent that is a part of a 20% agent. When you're interviewing your agents, you can check out on the link in the description. You can click the link and fill out this quick form. I uploaded a video because I had a couple people ask me, what is a 20% agent and what do you actually do to find an agent to refer? So I put a video on the website to explain that because I think it's important. I think it's very important because it's not a situation where I am, going in and let's see what's going on here. Here we go. Going in and just, pulling up Zillow and picking any old agent. Good grief. There we go. Coors Light 2025. Hey, great to see you. I know you're a regular. Our California Insurance Commissioner is worthless, putting it nicely. Yeah, thanks for making it part of a family show. Something needs to be done. I think the only way, like Joe and I were just, talking briefly, is that I think the only way that things change is that, the federal government has to put some restrictions on these, on these insurance companies, plain and simple. Here's my, thing. This is my opinion that I'm going to throw out, is that because insurance is a business, because insurance companies are there to make money, they are not providing insurance out of the goodness of their heart. They're there to make money. It's a cash business, period. When prices fall, okay, inflation, we saw earlier, the inflation costs, and I'll pull up those slides for those that are just jumping in now. I'll pull this slide up. This is a slide here that I had up earlier in terms of showing what the insurance, the inflation rate, and inflation is adjusted based on cost of goods and consumer spending. What's happening in the general economy. Well, let me ask you a question. So things, COVID, obviously things were rough during COVID. They peaked in June of 2022. Inflation dropped. That would mean that consumer spending maybe has dropped. The price of goods should also drop. And some things do. I mean, I saw eggs go from, $1.50 to $4 or $5, and that came down. But why is insurance always on the uprise? I have never, in the 24 years I've been in my home, had an insurance bill, homeowner's insurance bill, that has been lower than the year prior. My insurance bill has only gone up. And if my insurance bill is a direct reflection of the cost of replacement of my home, and that is dependent on the cost of building materials and labor and what it costs to replace that home, why do my rates always go up? Oh, wait, because insurance industry is a cash grab. And that's my feeling on that. Yeah, Clark says insurance is definitely a cash grab. You've seen what they did not do during Hurricane Sandy with the homeowners. Absolutely, ridiculous. Absolutely ridiculous. And you're absolutely right, Clark. AP, thank you very much. I just found you on YouTube channel today. Watched a few videos. Great live stream. Hey, thanks for being here. That means a lot. 100% means a lot. Just trying to provide as much value for you guys as possible. And again, I'll throw this out. This is something that I started a couple weeks ago. If you want to be included in the live stream, we've got a 508 number, a telephone number you can call, leave your first name and where you're calling from, and ask your question. And I'm going to feature you on the live stream, on an upcoming live stream, in your voice. Got a cool animation. I did a couple weeks ago when I had a viewer call in, and a cool animation to it and stuff. It was a lot of fun. But instead of me reading the question, it's you asking the question, which I think is cool. So if this is the number, give it a call, leave me a message, and we'll get you going on the live stream. So hey, listen, I'm gonna tap out on this live stream. You guys have been great. 100% love that you guys are here. We're gonna go out with some spooky music. Hey guys, don't eat too much candy this week. I know your tricks. I know you buy candy for the trick-or-treaters, but you only buy the stuff that you like because you're going to eat it if you don't give it out. Or you do what I do and put some aside and purposely don't give it out because it's the candy that you like. but don't eat too much because then you've got dentist bills and all that nonsense. Hey guys, have a great week. Be safe. Be kind to each other. We got some serious things going on next week with election, I think. But have a great week, everyone. Thanks so much for being here. We'll see you soon. Oh.